Good morning, everybody. Thanks for joining us today as this virtual session. The aim is to look forward to 2025, the economic outlook and everything that influences that. My name is Johann Els. I'm the Group Chief Economist at Old Mutual, and I'll moderate this event for you. So we're going to look at the evolving economic landscape. Environment for South Africa is looking a little bit better, but there's lots of uncertainty in the world, especially coming from a US policy change. So we'll focus on economics, we look at agriculture, we look at expropriation, we look at the government of national unity's policies and influence of that has on the economy, on land reform, on agriculture, and we'll talk about politics quite a bit because that's a huge influence here. On a housekeeping issue, this is a Teams live event, so you will not be able to turn your cameras on or your mics. So for Q&A, whenever you think of something, put it in the question and answer box, and it will be moderated. I'm going to start off by introducing my panelists, and then I'll have an economic presentation, and then I'll hand over to each of the panelists before we go into a Q&A discussion after the formal side of this event. So my first guest is Wandile Sihlobo. He is the Chief Economist of the Agricultural Business Chamber of South Africa. He's a senior lecturer at Stellenbosch University, and he will share his insights on the agricultural sector, and I'm sure he'll talk about the expropriation bill as well. The next guest is Prince Mashele. He's a renowned political analyst. He'll give us his views and perspectives around politics, the GNU, expropriation bill, other noises in the political arena. And then I've got Ndumiso Zulu, who is the Chief CEO of the Old Mutual Social Investment Cluster, and he brings his expertise in terms of small and medium enterprises, entrepreneurship, and he'll discuss the challenges and opportunities around that. So thanks again for joining, and I'll start off by looking at the economic outlook. Now, the headline is a better year for South Africa. I think we're perhaps going to have the best year in a decade or so in South Africa. Better growth, continued low inflation, and more rate cuts. Perhaps only one, but I think there's room for 2 rate cuts. We're heading into the budget next week, and I think we need and will see a fiscally conservative budget, enough so that we can see more positive direction in terms of credit ratings. Not immediate upgrades, but at least more adjustments of the stable outlook statements towards positive. And I think we can also look towards a more stable rand exchange rate. We'll definitely discuss that. Now, we know about the uncertainties out there around the US policy, around potential trade wars, the impact that will have. But you will agree with me, there's a lot of noise and volatility around that impacts on markets. And the job that we all have is to guide through those noises and those statements that might not necessarily impact actual policy. So the important job here, and especially in an investment environment, is to keep your head above the noise and look at the outlook and see where the real picture is. Just briefly, my forecasts for this year. Better growth, around 2.2% from 0.7 likely last year, and with an annual average over the last decade or so of 1%, that's certainly one of the best years we expect. And we'll go into the reasons for that, but less structural constraints and the cyclical side of the economy kicking in through low inflation. Inflation going to drift up this year, admittedly, but largely remaining below 4% in the first half of the year and below 4.5% in the second half. The continued low inflation environment, which should allow 2 more rate cuts. In fact, the current inflation environment in South Africa should negate some of the negatives coming from US policy and dollar strength, etc. So I want a conservative budget next week, and I think it will likely be conservative. With that, I mean continued lower deficits, continued rising primary surpluses, and a debt-GDP ratio that should stabilize this year and then ease. We'll talk more about that as we go along. That environment of better growth, continued low inflation, and conservative budgets should create an environment of more positive outlook statements from the ratings agencies, and within 12 to 18 months, actual upgrades. Rand could potentially have a 17 handle by the end of this year, despite the negatives from a stronger dollar that impact on other global currencies. The local factors should help the rand to stabilize and strengthen somewhat. Now, not going through all the words on this slide, but you will agree that there's been lots of negatives, lots of headwinds over the past decade, coming from the global financial crisis onwards, throughout the political uncertainty years, the COVID years, Ukrainian war, higher inflation, higher interest rates, load shedding, weak confidence, etc., etc. There's been such a lot impacting on the SA economy. No wonder that growth has been so weak. But lots of those headwinds have started dying down to a large extent and turning into tailwinds. So negatives turning into positives. No load shedding. Outlook there is improving. Even for Transnet, some of their volumes have started picking up during the second half of last year. The positive election outcome, the formation of the Government of National Unity, and the prospects for better policy and better policy implementation. And what I've talked about for a long time, the stronger private sector involvement in the economy. We've also got the low inflation, lower interest rates. That helps consumers. We've got pickup in confidence, perhaps a more stable rand exchange rate, even in this environment where the dollar has strengthened since November last year, quite significantly. The rand has outperformed other currencies. So certainly some prospects for better economic growth. Let's take a brief step back, and the reason for dismal growth, one of the big reasons in my mind, apart from structural issues and electricity and all those things, the lack of confidence, depicted here by the red line, which shows concern around the political climate. In that green shaded period, the time when Thabo Mbeki was president, Trevor Manuel, Minister of Finance, Tito Mboweni, Governor of the Reserve Bank, little concern about politics and policy, and growth was strong. And it makes sense. If consumers have confidence in the future, they invest, they spend, they employ more people, etc., etc. And then came the years roughly from the global financial crisis onwards, but also the election of Jacob Zuma as president, where that concern about politics moved up dramatically and growth collapsed. And there's a clear link between the two, even though this graph, of course, ignores interest rate cycles and commodity price cycles. The Reserve Bank study shows that growth would have been roughly just more than 1% per year higher than the 1% annual average, so above 2% instead of 1%, had confidence been the same as in the green shaded good years. Makes sense. And then came the Government of National Unity, middle of last year, and that political risk measure started improving dramatically. So that's a big issue in terms of future, better, stronger, sustained economic growth. And that's why I've been saying for a long time that growth can turn around from that downswing we've had into a rising trend going forward. Even before the formation of the Government of National Unity, the shift in economic policy has been clear in terms of allowing the private sector a far bigger role in the economy. And that private sector role in the economy has been helping and will continue to help, easing some of those structural constraints we have. So from a 1% annual average growth rate on a sustained basis over the last decade towards 3%. We're not getting there immediately, but we're on track to get there. And that will start lifting confidence in turn, and that lift in confidence will drive that growth. Of course, this isn't enough. We've got serious constraints around the skills deficit, the regulated labor market, etc., that prevents us from getting towards 5 or 6%. But the 3% is readily achievable through this bigger role of the private sector in the economy. We've also recently, in the shorter term, started to see some improvements. The Reserve Bank's leading indicator index is on an uptrend, suggesting better growth 6, 12, 18 months down the line. And look at the consumer confidence components. This is the Bureau of Economic Research at Stellenbosch University survey, where consumers, the green line, feeling better about their household finances. Even before the elections last year, this started building, where lower inflation has started to work its way through and consumers feeling better about their finances. Some not great, but decent enough job growth since the start of 2022, even though some of that was, of course, a recovery from COVID, a recovery from the job losses during the 2021 unrests, but still job growth nonetheless has had an impact here. And consumers also feeling better about the economic position of the country. But the real surprise has been the inflation picture. Inflation surprising strongly to the downside. Despite that, much weaker rand exchange rate over the last 14, 15 years, inflation broadly moved sideways. And one of the big reasons, of course, is in a weak economic environment, the difficulty to pass on those price increases. But certainly during the second half of last year, quite a bit of a downside surprise. And we've seen inflation, look at core numbers in the middle, the underlying trend, the light green line, that's the trend over the last 3 months or so. So the shorter term price trends below the bottom end of the Reserve Bank's 3 to 6% target range. Other inflation measures, whether it's consumer goods, that's the weighted average of clothes, shoes, furniture, appliances, vehicles, just 1.7%. Retail sales deflated down significantly. CPI excluding petrol down significantly. And let me just briefly interrupt this by saying I absolutely trust South Africa's inflation numbers. The method of calculating, the method of disseminating, getting the data, etc., amongst the best in the world. But inflation expectations has also downshifted significantly, as rentals, a big component within the CPI basket, surprised to the downside recently. So across the board, there's very little inflation pressures out there. And if we look at the Reserve Bank's forecasts for CPI headline inflation, that's on a quarterly basis, left-hand graph, you can see the downshift that we've seen at consecutive MPC meetings from July last year to September to the yellow line November, and in January this year, revising it down even further. Yes, it's going to rise throughout the year, as my own forecast in the middle graph shows as well. But the new CPI weights that will be introduced with the January inflation numbers that's only going to be released next week suggest somewhat downward bias to forecasts. You can see my forecast on the right before the new weights and with new weights if I plug that into my inflation model. Now, the Reserve Bank's forecast does not yet include the new weights, nor does it include the fact that electricity price increases was actually lower than what the Reserve Bank had assumed in the inflation forecast, lower than what I had assumed. So there's downside potential when the Reserve Bank presents us with their next set of forecasts in March, and therefore I think rates will likely be cut again. Now, the budget, we need the budget to be conservative. We need fiscal consolidation to continue. There's not a lot of room in this economy for actual income tax increases, but do expect sin taxes on alcohol and cigarettes to rise. Do expect a petrol price levy to rise. It's been constant for a couple of years. And last year we saw no relief for fiscal drag. I think that should be expected again this year. So that clearly is a little bit of a negative for consumers, but in an economy that can perhaps handle it better, we absolutely need to see a continuation of those fiscal consolidation measures. What that means for ratings is, I think there's upside potential for ratings. We've seen ratings bottom. We've seen S&P adjusting their outlook statement from stable to positive. I suspect within 6 to 12 months, we'll see Moody's and Fitch also upgrade their outlook statement from stable to positive. One of the big factors there is, look at the bottom row there, the debt ratio that these ratings agencies assumed when they last changed their rating. So where the ratings sit at the moment, that's the debt ratio they assumed. 110% for Moody's, 85% for S&P, and 95% for Fitch. Our actual rating debt to GDP ratio, I should say, is much lower than that. If you look at the graph on the left, from October 2020, what was expected back then in terms of the debt to GDP ratio, now much lower. The orange line is the latest line from Treasury. Now, there's lots of potential scenarios around that. I don't think that Treasury will want to go and give big financial support to state-owned enterprises. Yes, Transnet needs some money, but I think the support will likely only be around support for interest payments on their debt. However, the red line shows a scenario where 200 billion is spent on helping municipalities, Transnet and Eskom at a 2% growth rate. That is a scenario that markets will not like. I would prefer the debt to GDP ratio to stick very closely to the orange line, which was presented in October last year. That is what markets want. If we do get to a scenario where we actually see 3% growth on a sustained basis and there's no further support for municipalities or SOEs, the green line is the likely outcome. I think that's too positive a scenario, but just wanted to present you with a range of possibilities there. I do not think the red line is going to come through this year. I think there will be slow incremental support going forward and no big bang type approach. The same with the fiscal consolidation, no big bang approach. The rand is weakened in line with a stronger dollar, but if you look at the right-hand graph, all currencies indexed to the same starting point, January 2024. The rand has outperformed many others despite a stronger dollar. Local fundamentals are busy impacting very nicely in terms of that. Better growth, less political risk, less fiscal risk. I thank you very much, and I now hand over to Wandile to take you through his presentation. Thank you.
Thank you so very much, Johann, for that, and good morning to all of the colleagues that are joining us online. Let me make a few remarks, Johann, really underpinning the optimistic picture that you have just painted, because as the agricultural sector, we are coming from a year that was very difficult. Many people saw the growth figures, although I think the figures that you saw for Q3 in agriculture, when Stats SA releases the Q4 figures for the whole of 2024, you will see that there will be some revisions that will be made there, and perhaps also even the Q4 figure for agriculture will be much better, because in our sense, there's a lot that was actually delivered by the farmers in the last quarter of the year, which would ordinarily be the harvest that would appear in Q3. But looking into this year, though, we think this will be a year of a recovery in agriculture. We were hit by the midsummer drought last year, El Nino. This year, we are in a La Nina period. Yes, there are certain areas of the country that received late rains, but I think in totality, when one drives across the country and get a sense of where things are, farmers have managed to plant reasonably well. And yes, there are areas that planted almost a month behind the typical planting cycle. But overall, things are looking reasonably well across South Africa. Beyond now the grains and the crops, one of the important subsectors of our farming economy is livestock and poultry. The major challenge over the past few years were animal diseases. Either you're talking to dairy farmers, beef farmers, pork producers, and poultry producers. But this time around, South Africa has done a lot of work over the last 6 months on controlling the spread of those diseases, and we have been cleared of many to an extent that we are even now exporting and doing reasonably well. And I think, Johann, your point about the improvement on electricity supply, that helps us a lot, because we have a subsector, which is fruit and vegetables, that depend 100% on irrigation, and we have been seeing certainly the benefits of that, which is why even if though 2024 was tough in agriculture in South Africa, when you look at the exports figures, you will see that agriculture will probably have crossed $14 billion for the first time last year, in part because of the higher volumes that are coming out of the fruits. Looking at a snapshot on the major grains that I think are very important, even on that constructive picture you have just painted, Johann, about the inflation side, farmers in South Africa planted slightly bigger area compared to last year in the major crops. And yes, those that are planted by a month late, we are also not at risk, because when we think about the rainfall, it does look to us that these La Nina rains may continue through to March. And by that time, that is where much of the flowering of the late planted crops will actually occur. Assuming we don't have frost at the end of the season, our sense is that agriculture may register a positive growth of around about 6 to 7% this year. In terms of food inflation, we are aligned with the view that you've just painted on a general broad inflation, although we see food inflation this year averaging at somewhere around about 4.8 to 5%. So still really an accommodative picture compared to where we're coming from, as well as considering the base effects. That's the broad story of how we are seeing the agricultural sector. But there will be a lot more conversation also about the policies in the sector. And I think what you will see coming from Minister Steenhuisen or anyone on the land affairs and agriculture, some of the aspects that they will probably speak about correctly so are these ones that are on your screen. The issue of biosecurity, which entails all of the animal diseases and plant health, will continue to feature because with climate change, we see more and more risk of those diseases. And unfortunately, South Africa, over the past decade of state capture, we also lost a lot of capacity at the Agricultural Research Council, as well as the OBP and the others that used to produce vaccines, to an extent that today we don't produce a single agricultural vaccine in South Africa. We import from Botswana and the others, but we do have the equipment and the skill set, and we will be now talking more about how do we revitalize that, along with various regulations in the Department of Agriculture, like that Act 36 and the others. These are acts that are important to be revised because they enable the private sector to import all of the technologies they need in order to boost agricultural productivity. Prince will talk a lot or briefly about the municipality efficiencies and the other things, but I do think that that's another area that must be a focus because in agriculture, it affects us massively negatively, and along with the issues of blended finance. But the other important aspect here, and to the colleagues online, is the story of exports. And I think this year, if I were to say what are the top agricultural things, it would be exports, it will be animal diseases, biosecurity aspects, as well as land-related matters. The export side, the challenge that South African agriculture faces is that today we are exporting between 50 and 60% of what we produce in value terms. The areas at which we export to are nicely diverse. If for a moment you look on that chart on your right-hand side, you will see that 40% of our exports go to the African continent. And then you have about 20% to the EU, 25% to Asia, the Americas fairly small, about 6%, and the rest of the world. But the point is that we now need to grow as many markets as we can to the BRICS and the other areas, while at the same time working to retain these markets, because we are beginning to face some challenges in the EU and elsewhere. And I think this links again with all of the discussions about AGOA and the others, which we can get into in a moment. And I think the other aspect, of course, that has dominated the headlines, which in our perspective at the Agricultural Business Chamber, reading it, we think that all of the conversation and the noise around the Expropriation Act has been exaggerated. Our reading of it is that, yes, it is an update from the 1975 Act, but the only really critical addition is this possibility of a nil compensation. But I think people forget that that is a determination that may be made by the courts, and they will still have to consider whether that is just and equitable. And it has to run through a whole range of other regulation, about 200 pieces or so of regulations that are there, have to comply, to an extent that our reading of all of this, we did not think that there are a number of risks that presents it. And I do think that there's a mistake that is being made also of conflating the Expropriation Act with land reform, because land reform in South Africa still runs under the usual policies, which is about three legs: the land redistribution, land restitution, as well as a land tenure. This Expropriation Act, when used, it will be used as a last resort, and it has to comply with all of these kinds of things that I've just highlighted very briefly now. What I see as a positive, to underscore again the optimistic picture that Johann is painting, is that in agriculture, if anything, there's a lot more upside now, because we forget that between 2006 up until last year, the South African government bought 2.5 million hectares of land, which is now sitting under what we call the agricultural land holding account. And this land can be transferred to beneficiaries with title deeds. And that's what they intend to do. And paired with blended finance and private sector collaboration, we think this amount of land will actually be able to deliver an extra 30% improvement in a gross value added in agriculture, as well as that close to 1 million jobs that can come from agriculture in the value chain, considering all of that is done appropriately. There are plans in place. All what is left now is for these to be implemented. Let me stop there, Johann. Thank you so very much.
Thank you very much. That was insightful. Thank you. Gave me some comfort there around production and prices and the impact on the economy. Thank you very much. We hand over to Prince. Prince, spoil us with your thoughts around politics, please.
Thanks, Johann. I am trying to share my presentation. Just give me a second to get to it.
While we get that up, Wandile, the most important question that was on was what's happening to coffee prices?
Those coffee prices, Johann, I would pair them with orange juice prices and say for the next year or two, that those will likely remain fairly high. And of course, if you are a citrus farmer in South Africa, all of this is very good for you. I'm thinking now of the folks up in Limpopo, Eastern Cape for the orange juice side. But I think on the coffee prices, the challenge we have is really the supply because of those droughts in South America and in Vietnam, the floods that are there. And I think replanting will take for some time. But in my closing point, I would say in South Africa, we haven't even seen what is happening internationally coming in. So next time you drive to the office, you are likely going to pay more for your coffee.
Okay, let me start here. The first observation to make about South African politics is that it's too noisy. And because it is so noisy, it's very difficult for us to make sense of it. That's the first observation. So in order for you to make sense of it, you need a framework. You need to have a guiding framework that will help you understand what is going on so that whatever noise that you hear, you can be able to gauge it. So the first thing that you, as part of the framework, and this is the bigger picture, is that South African politics is going through a realignment process. A realignment process in politics happens when a political force that used to undergird the stability of that society recedes. In other words, it leaves the center stage and it leaves the field open. And there is almost no one who is now undergirding the stability of that society. And we witnessed that in 1994 when the National Party exited the political stage. And when that happens, there's anxiety in society. People are not sure what's going to happen in future, and various forces jostle to take over. That's exactly where South Africa is today. We are witnessing a realignment process, and the political force that held South Africa together since 1994 up to where we are obviously has been the ANC, and the ANC is exiting the stage. That's why there is anxiety in society. We don't know what is going to happen tomorrow, who's going to take over tomorrow. Most South Africans, including international observers, are concerned. They are not sure what's going to happen. So that's exactly what we are witnessing. That's the second aspect of the framework. That is, the ANC is exiting the scene. The third aspect of the framework is that the political space is now more open. And it will open up even wider as we go further. So that's the fourth, and this is the last part of the framework. So if you take these 4 points, you'll realize that they will make you understand what is going on despite the noise. And the fourth point is that we are going to live in an interregnum of coalition politics that will last, in my estimation, for a minimum of 15 years. In other words, for the next 3 elections, there is no single party that is going to win an outright majority. So we need to expect that the South African political scene is going to be noisy for a very, very long time, and there will be coalition politics that will be in charge of our state. So that's the framework, the bigger picture. But what about the short term? What are we going to deal with in the short term? This year, next year, and the year after? The first thing that we must expect is this, is that we are going to have a cacophonous government with no sense of direction. And this is the government of national unity. It's going to be noisy. You will see parts of the government taking the other part to court. And we are already seeing it with the DA, by the way, going to court to challenge the expropriation act. So this kind of stuff will happen because the parties that are constituting this government of national unity necessarily don't agree on policies and on issues and the direction in which the country must go. And we need to keep that in mind. But having said that, this, and I've said it before, will be the most stable government under the circumstances. Noisy as it is, but it sounds like a contradiction. It is a better government under the circumstances. Why? Because those who constitute this government don't trust each other. Because they don't trust each other, it means, for example, they can't do corruption together. You have a leading party, which is the ANC, with 40%. You've got the DA also, which has got 21%, and you've got other smaller parties in the same government. So they are always watching each other. What will not happen, in my view, is that these parties are not going to regress. They will, and they're not going to progress South Africa in any significant way. What they will do, they will arrest the decline that had been taking place before this government. So I think we can take a positive thing up from this government, that they will arrest decline, even though they are not going to progress South Africa very much because they don't agree on policies, on issues. But this will be at least a government that is going to keep things a little bit stable. So that, I think, is important to keep in mind. Alongside that, we must expect that the parties that constitute this government, including those that are outside, will grandstand and trade extremes. So you will, from time to time, hear the ANC trading extremes, for example, and you wonder, but is the ANC not part of this coalition government? They will do that because they want to send a message to their constituents that they are not dead. They are in charge of the government. Even the DA on the other side will from time to time send messages that seem to contradict what is happening in government. So that we must expect, but the government will not collapse. It will continue. The DA will not pull out of this government. The ANC will not pull out of this government. Even the smaller parties will not pull out of this government. Noisy as it will be. Outside the government, what we must expect is that, given the noisiness of the political scene, we will from time to time have to deal with non-state actors intervening to widen social cracks. So from time to time, for example, you will hear AfriForum, by the way, making some noises that are concerning in society. From time to time, you will hear Operation Dudula protesting here and there, trying to take advantage of the fact that there is, inverted commas, there is no one who is in charge. All these parties are jostling for influence. So the political environment will be noisy, but the fundamentals, if you look closely, they will be generally stable. And then the fourth point I want to make in the short term is that society will always be on tenterhooks, will be concerned. From time to time, we'll be worried about what is coming from the US, AfriForum going to the US, Elon Musk, and expropriation without compensation. So society will be on the edge in the short term and into the long term, by the way. So we must expect that the anxieties are not going to be removed from our political environment. They will always be there. But what we must watch is the stability of the government, that the government is holding, the fundamentals are there. The situation is not improving very much, but the situation is not worsening. So that's what we must keep in mind. We must not fool ourselves and think that there will be no noise. It will be very noisy. That's the short term, and we can get into details about specific parties if you want us to talk about that later. The last slide is about the next milestone. The next milestone, obviously, are elections next year, and the parties will begin to position themselves for the local municipal elections towards the end of this year. So we'll hear a lot of political noises towards the end of the year. Each political party trying to position itself towards next year's election. So the second part of this year is going to be, the political noise will be heightened in the second part of this year. But here is the thing about municipalities, and Wandile said I'll say something about efficiencies. Our local government elections do not improve the quality of of services. That we must keep in mind. If we look at the trajectory of our local government municipalities since the first local government elections, I think it was in 1996, you can see that overall services are declining and have been declining. Even next year's elections are not going to improve services. We can isolate, by the way, municipalities in the main, in the Western Cape, because there the DA is in charge, and you can see all studies, by the way, even studies by government itself have found that the Western Cape has better performing municipalities. But outside that space, services in municipalities have been worsening, and even after these elections, services will worsen. And the reason why this will happen is because there will be no outright winner in almost all the metros in our country. And this is in summary, this will be, in my view, the outcome of the elections. One, the ANC will decline further across the board. It won't improve. Tshwane, Johannesburg, Nelson Mandela Bay. There is no big metro where the ANC is going to improve. Secondly, the DA, it's not going to break its ceiling. It's going to get stuck across the board. And this complicates the picture because it means that there will be no clear winner, and the coalitions in municipalities will be even more complicated than we have now. And then the third, the EFF is going to move in reverse. We have already begun to see the EFF going in reverse. The ructions that have taken place, the departure of Floyd, Dlozi, Dali, and them, the EFF will no longer grow. Even, in fact, by the way, the EFF doesn't perform well in municipal elections. It performs better in national elections. Why? Because the EFF doesn't have councillors at a local level who can be trusted by communities. And then the third, last observation is this: the MK party is going to grow in KwaZulu-Natal, and that will have implications for the national picture. I think that the MK party is likely to take over municipalities like eThekwini. So it will do well in KwaZulu-Natal, and that will have implications for the national level. But it will be a mixed picture at a national level. There will be no one party that is confident and dominant in order to drive policy in a particular direction. So the atmosphere is going to be even more divided and more fractured. So I think that is the bigger picture. We can get into details, but I thought I should just paint a picture to give you a framework in order for you to make sense of where the direction in which our politics is going. Thank you.
Very much, Prince. That indeed is a nice framework to have and to think about these things amidst all the noise. With that, I hand over to Ndumiso, please, and then we can take questions and discussion after his presentation.
Thank you, Johann. Good morning to all the colleagues online. May I just quickly check if I'm audible and you can see my presentation? Thumbs up. Thank you, Johann. Fantastic. So one of the downsides of speaking last is that when it comes to Q&A, all of the hard questions come to you because your presentation is still fresh in mind. So I'll make a pact with our audience. If they direct all the hard questions to Prince and Wandile, I'll do my presentation in 5 minutes. So very briefly, so I'll look after the SMME business within Old Mutual. And I just wanted to start off with an overview on the SME landscape in South Africa as it currently stands. I think it is common cause that SMMEs are where the true potential for unlocking economic growth in our country lies. If SMMEs grow and prosper, our economy will also grow and prosper. So why is that not happening at the moment, or at least why is it not happening at the pace and scale that we would like to see? I think some of the key challenges that SMMEs and entrepreneurs face is around access to funding as a start. You speak to any entrepreneur, they'll tell you, I need funding. I always hear there's funding available elsewhere, but I struggle to access it. Why is that? Later on in the presentation, I'm going to zoom in a little bit on that, some of the funding sources available and what may be an appropriate funding source for your particular business, depending on where you find yourself as a business in your growth cycle, but also the type of business that you are running determines the type of funding that you qualify for and you should try and pursue. One of the frustrations you also get to hear a lot from entrepreneurs and consumers is just around the strict regulatory environment, the compliance hurdles, your FICAs, your tax compliance, and all the things you need to get through before you can access funding. So on the one side, I don't think you're ever going to escape that. We operate in a very mature financial sector, on the one hand, which is a good thing, but it is also highly regulated. So for the funders to give you funding, they need to meet these regulatory hurdles. Otherwise, they find themselves in trouble with the regulators. And you may have seen some of those in the press already. What that does, on the other hand, is it stifles the pace at which entrepreneurs can access funding, which continues to be a challenge. That is exacerbated by the fact that if you look at SMEs in South Africa, almost 2/3 of them operate in one extent or another in a manner that is largely informal. So the business is not always highly formalized, whereas you have a private sector or a financial sector that aims to service them, and the private sector and the financial sectors are very formalized. So you already have that discord between what the expectations from a potential funder are and what a potential entrepreneur can actually afford to do. That only just serves to lengthen the period of trying to access funding. Infrastructure challenges, it's been touched on by my colleagues in terms of some of the service deliveries. In the past, we've had a lot of challenges around electricity availability, particularly in the townships and the rural areas, which is where a lot of some of the SMME activities takes place. So depending on where we land on those challenges as the country, it's going to be a big impact. It's going to have a big impact on whether entrepreneurs and SMMEs prosper. Market accessibility and access to market is probably the second biggest, if not the biggest challenge that entrepreneurs face after access to finance. Now that I have a business, now that I've secured funding from somebody, where do I sell my product? Is a question you hear a lot about because there's always a challenge in being able to penetrate the established markets because they have established players that are already taking place there, and they are obviously not running an open door policy that says new competitors, please come in. So in the way we try to solution for SMMEs, particularly those that are Black, female, previously disadvantaged groups in general, funding alone is not the solution. It's one thing to provide funding. It's another for the entrepreneur to be able to actually use that effectively. And just on that aspect of the use of funding, once you've secured it, I cannot emphasize enough the importance of financial education and financial literacy for business owners in terms of making the right financial decisions for your business. Otherwise, you will access the funding, but down the line, you run into trouble with your funders because from a compliance side of side of things or from a supply of covenants and financial information, you are found lacking. One of the solutions to that, because it's not only an inhibitor in terms of accessing finance, it's also an inhibitor in terms of securing partnerships across your business, is leveraging technology and digital solutions. I think one of the fortunate things about living in the digital era, when we talk about leveraging technology in 2025, it's very different to 1999. You picture a large, complicated mainframe that costs hundreds, if not millions of rand. Today, for most businesses, leveraging technology really means something you can do in your smartphone. You can do your invoicing, you can do your financial statements, which then takes away the admin burden of running a business into a technological solution, so that as an entrepreneur, you can actually focus on driving growth, on securing more customers, and growing your business. I do not intend to run through this presentation in its entirety, so I'm going to skip through some of the slides. One of the challenges we face when it comes to South Africa's economy is the high unemployment rate, particularly among youths. But on the other hand, you also have a very low youth participation rate in entrepreneurship. So in theory, if not a lot of young people are getting jobs, maybe we should be supporting them in actually creating jobs instead of looking for one. But if you look at that 12% participation rate, it also points to us having a problem. And one of the things is the access to capital I've spoken about. It's the fact that they usually don't have any experience in running a business, which is always a turnoff for a potential funder. But also, I think just as a society, we have an integrated entrepreneurship and posited it as a valid sort of career choice. So you'll find that in most instances, people want to start a business because they can't get a job. That means if I'm halfway through running a business and there are challenges, of which there always are, as soon as I get a job opportunity, I'm going to quit this business and go back into employment. What does that mean for me as a funder and my appetite to continue funding SMMEs? The one other slide I just wanted to share was just around funding sources. I like this particular slide. A colleague of mine shared it. It really just tries to map out the different types of funding that SMMEs can access. And it's largely dependent on the type of business you're running, but also the maturity of your business. Everybody is familiar with traditional banks in point number 7 there. And the biggest outcry you're always going to hear is how banks do not want to fund businesses. I think the issue is the maturity more than appetite. Nobody goes into business and then when they get there and then say, I don't want to do that very business because why did you start it? I'm happy to share these slides as well. But also, if you look at the left side of the screen at the top, that's where some of the biggest gaps lie. Access to funding opportunities at a very high risk stage. People who just want to back you as an entrepreneur to start your business where your business is at a too early a stage for a stranger or a bank to actually want to fund you at that point. We need to find a way to address that gap. In more mature societies, friends and families play a big role in getting people started in running their businesses. I don't know how many people in South Africa have a rich aunt or uncle who's willing to do that, to say nothing of the fact that lending money to family is almost always a bad idea. So just in wrapping up, I just want to say that depending on the type of your business and the type of funding you need, part of the reason entrepreneurs get rejected when they look for funding is that you are knocking on the wrong door for the wrong kind of funding that you're looking for. So as a starting point, understand how your needs dovetails with the solutions and the funders that are out there. I think if you do that effectively, you will see an improvement in your ability to secure funding. There are other structural issues that we need to solve for. I'm not going to get into that today, but I think as an outlook, as a sector, we are quite excited about the 100 billion rand SMME fund that the president has spoken about. And we hope that it's not going to take another 5 years for it to actually land, because it's when the money hits the pocket of the entrepreneur that the rubber really starts to meet the road. I will pause there, Johann and colleagues, and thank you very much.
you so much. Appreciate that. That was insightful. So our time is running out rapidly, and I want to get to some questions. So if I can ask you, my panelists, to be very brief indeed, please. I'm going to ask each one of you one question, and then if you can briefly answer them, and then we'll look at the audience questions. I do want to get to that. I do want to say to the audience, with my panelists' permission, we will publish the slide packs afterwards, various areas. Wandile, if I can start with you, I was encouraged by your comments because it fits in with my own inflation assumptions that food inflation will average around 4.8 to 5%, you said. That's encouraging. So it will, of course, drift up. The last number was 1.7. So it will drift up, but that's nothing too serious, mostly base effects around that. Before you answer, let me run through the three questions I have for all of you, and then you can start. Prince, I wanted to ask you, you mentioned the GNU parties don't agree on policies. I was surprised by that comment. I thought the DA and the ANC now, because the ANC actually started this before the GNU, agrees on a bigger role of the private sector, at least. And in my mind, that's a big policy agreement. Just your comments. I might be totally wrong. I would love to hear what you think about that. And then Ndumiso, you said one of the big areas, well, there's many areas in SMEs, ease of doing business. My question to you is probably the most difficult one. Are you engaging government to help in that process, to pressure them in terms of that process? So let me start with Wandile.
A few things, John, Johan, that I think is going to happen is that the maize price has been fairly high. You saw it, Johan, from November all the way. And I think we will start to see that feeding through. What we must appreciate is that the pass-through is usually about 3 to 4 months. So my sense is that from the January figures all the way through to May, you will see that the base effect as well as that part of the grain component is the one that will push up. But as you get into the second quarter of the year, you should see some bit of a moderation. And I think it's a combination of that will put us there. And lastly, I do think the other food component that may be up a bit is meat. And that is related in part with what you have also mentioned about the households starting to improve a little bit and going out there. And I think that demand is also going to have a pricing effect, but that's how we see food this year.
Thanks very much for being short. Prince, over to you. Your sound, Prince. You're on mute.
The ANC is the... Can you hear me?
Yes, I can.
Yeah, the ANC is the complicated partner in this arrangement. Why? Because within itself, there are different forces that are pulling in different directions. So you have the unions. Remember, the ANC has an alliance with the Communist Party. It still has an alliance with COSATU. And you have a grouping within the ANC that believes in a private sector-led development. So when they go to government, they complicate discussions with partners in government. The DA speaks with one voice because it doesn't have these complicated alliances. So as a result, there is no coherence in government because the ANC and the DA can't agree because the ANC has to placate its alliance partners outside the state. That is the main problem. So all of the stuff that you are hearing about expropriation without compensation, all of that stuff is stuff that is trying to placate the radical left component of the ANC. So that's why I say that there is no agreement in terms of policy. Throw into the mix the other smaller parties that are part of this arrangement that also want to be seen to be saying something. So that's why this government of national unity can't cohere around policies. But they all agree that we don't need load shedding. There's no one who says we need load shedding. So if you were to go on, if you were to go from one fundamental to another, fixing Transnet, they all agree that we need to get stuff to the ports. So the fundamentals are safe, even though they differ in terms of policies.
Right. Thanks very much. Ndumiso?
Thank you, Johann. Quick question. Quick answer to your question is yes. And part of the reason is because there are issues that the private sector cannot solve for. Those are policy-related issues. And if you do business in the townships, for example, like ourselves, and in rural areas, there's a rising scourge of protection fees. For example, we got a letter yesterday from one of our clients says this has been delivered. Somebody said from now on I'm under their protection and I need to start paying them a protection fee. Again, as a private sector, we can't solve for that. There's the example of student accommodation, for example. The demand is there, it's great. But then there's always issues about the owners of those units actually getting paid at the end of the month. The funding is there, the solution is there, but the policy and sort of the oversight then creates a bottleneck in those businesses actually being able to thrive. So yes, we are engaging the government on those issues. Thank you, Johann.
With that, time's up. If my audience are willing to stay, if my panelists are willing to hang on a few more minutes. Ntando, have you got one question each for the panelists from the Q&A box? While you're getting that ready and voice that to us, let me just briefly answer the US-Trump trade questions. There's lots of noise around that. Trump likes to use these threats as negotiation tactics. Lots of those policies likely will not be implemented. AGOA for South Africa is important, but then a very small portion of our exports are subject to the tariff regime under AGOA, only around 2.5%. So it's not the end of the world if we kicked out of AGOA. It more sentiment, market impact comes from the sentiment and the noise around all these issues. Ntando?
Hi, Johann. So I have 4 questions for each one of you. The first is for you, Johann, and it is, what is the projection for the rand to the dollar in the next 6 to 12 months? Prince, your question is, do you think EFF and NK will eventually join the GNU? Then for Wandile is, if the expropriation bill is not such a big issue as you said, why sign the bill in law in the first place? In my mind, it is only signed into law to implement it or for some other political gain. What are your thoughts? And then for Ndumiso, what industries or sectors present the most promising opportunities for SMEs this year?
Ntando, great. I'll start. Currency forecasting, that's dangerous. So we can only try and look at trends. The rand is undervalued compared to its fundamentals. The dollar has a big impact in the short term. I think the dollar strength is likely overdone, market impact on that. Around the noise of Trump's policies, the dollar will likely not strengthen significantly from here. SA fundamentals busy improving. So I think the rand will likely stabilize around current levels for the next few months, but could potentially strengthen somewhat, and a 17 handle towards the end of this year isn't impossible. In the medium to longer term, the rand likely more stable, given improving SA growth, less fiscal risk around that, some ratings upgrades, etc. Thank you. Wandile?
Look, we had an expropriation bill, as the colleagues online know, from 1975. And one way or another, at some point, you were going to need to use it. Either you are building a bridge or school or whatever you see it as a public interest. So it is better to actually have one that is aligned with the constitution of today. So generally on our side, we move from that premise, which is why we're saying, why did we need it from the first place? Because we did have it, but it was not aligned with the constitution that we have. We still think that its usage very limited as a last resort, but it is certainly not a government policy to drive land reform. Quick last point. To John's point about AGOA, even if we were up there, I agree with all of what you said, but I do want to underscore that the tariffs that we were to face in the US, on average, they are about 3% if we were out of AGOA. So it is indeed, as Johann was saying, not a roof is not going to fall over our heads if we are out there. The one thing that South Africa must have is to try to transition from AGOA to an FTA, free trade area. But Johann can write a lot about that at some point to clients. Thank you.
Thank you. Ndumiso. Oh, sorry, Prince, you first.
The short answer is the MK and the EFF will not join the government of national unity, period. They refused to join in the first place. But this is what, and this falls outside this year. This is one of the scenarios that are likely to happen. Cyril Ramaphosa's presidency of the ANC ends in 2027 in December. And after that, I don't see him finishing his term as president of South Africa. He's going to be pushed out. In any case, two of his predecessors did not finish their terms. It has now become a culture in the ANC that a president does not finish his term. And by the way, Cyril Ramaphosa is the weakest president of the ANC. We can get into details about that. So he's going to be removed. He's not going to present the 2028 State of the Nation address. And that means that will be the end of the government of national unity as we have it today. What will come after that, most likely, will actually be the ANC, depending on who will lead it, the MK party, and possibly the EFF. That is 2028, not this year, not next year.
Thanks, Prince. Ndumiso?
Thank you, Johann. So I'll just pick two, but by all means, it's not an exhaustive list. I think as a start, e-commerce has grown tremendously over the last 4 or 5 years or so, and it will continue to do so. Last year, we had one of the biggest e-commerce players in the country, and they were saying they are actively looking for local suppliers to sell their products on their platform. Another one I touched on it briefly was around student accommodation. If you look at the demand versus the supply and the issues that underpin that, but also to a certain extent, even construction, when you look at where we are from an infrastructure point of view. But that obviously comes with its own challenges. But I think those three for me hold a lot of promise for SMMEs. We typically look at them as big projects for big players, but if you really dig deep into the wider ecosystem, you will see there's quite a lot of opportunities in which entrepreneurs and SMMEs can actually meaningfully participate. Thank you, Johann.
One last question that I would like to answer. The question is whether the political storm with the USA, us versus USA, etc., affect the budget at all. And the answer is no, I don't think so. The budget has been decided upon, it's been set. Indirectly, perhaps what we must do in a storm like this, we must try our utmost to create stability. And the budget should therefore, but I think it will, continue to show fiscal consolidation, to continue to make sure that foreign investors are happy with what we're doing around that. And through that process, we can ease off some of the tensions and the potential impact of that on us. With that, time is up. To everybody attending, thank you very much for taking time out of your day. To my panelists, Wandile, Prince, Ndumiso, thank you very much. To everybody in the background, thank you very much. We will publish the presentations. Have a good day. Thank you. Bye-bye.